Welcome back, guys. We're going to do a quick video on the introduction of the different types of candlesticks. Now, if you remember from our very first video, each one of these candles here are what we call candlesticks. So there's a couple different types up here. If you look right beside our time frame right here, if you look right here at this button here, pulls down a drop menu, and it gives different types of candlesticks that we can use to view our chart on. So let's start with bars. There's really nothing special about bars. Is really reading the same trends and the same candles. They just look differently, really. So you can see that these are no longer full body bars, but these are more just lines with little crosses on them. I don't know too many people who really use the bars, but we're just kind of running through the different types up here to see what they are. Candles are the most popular one, most familiar one that everybody uses. And these are what these are here. So you have full body red and green candles, and you have these little wick looking things underneath them, and we'll get to those in just a second. So this is the most popular one. Green obviously means there's a bullish trend, or it's going up, there's buyers. And these red candles mean that there's selling pressure, or the bears, as they're called, are in control and pushing the stocks. Okay, so let's go to our next one here. Hollow candles, pretty self-explanatory. I don't know a whole lot of people who use these either. It seems to only hollow out just the green candles, but I'm sure you can change those up here in your settings somewhere. Now, Heiken Ashy is probably another one of the more popular ones to use. And what the Heiken Ashy candlesticks are, they're constructed like regular candlestick charts, except the formula for calculating each bar is different. So these are more or less used for capturing the overall trend, so to speak. As you can see, that these candles look differently from the regular candlesticks, as these are all green, as the green is showing in an uptrend, and then you can start to see where they start to turn red to signal a downtrend. So let's compare the Heiken candles to regular candles. So if we come up here to the top right here where it says select layout, you have a couple different options here, and this is kind of like photo grid or something. And it basically just chops your screen up into a, whatever pattern that you want. So let me just choose this right here, this on top one. And then this is what it does. So now we can see the comparison, or we can start to compare what happens between when we click the Heiken candles over the regular candle patterns. So let's look like here. We were just speaking of this. Now you see that this captures the trend of the Heiken candles, and they're all green. Now, despite some of these candles down here in the regular candlestick patterns, you have some red ones or some selling pressure. You don't see those right here, as this is really just signifying the overall trend. And it's a pretty good candle system to use. So that's mostly what the big difference is between them. So the Heiken Ashy has a smoother look, as it's essentially taking an average of the movement. There's a tendency with the Heiken Ashy for the candles to stay red during a downtrend and green during an uptrend, whereas the normal candles alternate colors, as you see here, even if the price is moving dominantly in one direction. So for here, for example, like we just pointed out, you have some red candles, even though the overall trend is moving in a bullish direction. It just means that within this one candle period that there was a little bit of selling, whereas in the Heiken candle pattern, the trend is just signaling the trend. So it doesn't really start to change colors until it's signaling that the trend is reversing. So here you see these are still green, but you have here a mixture of red and green here. One other small thing to note is if you look at the price differences between the two candles. So this is the same chart. This is both Bitcoin. This is both on the 12-hour time frame, and these are both on the same exchanges, but you just see a difference in the prices. So the current price shown on the normal candlestick chart will basically be the current price of the asset, and that matches the closing price of this candle. Now, since the Heiken is taking an average, the current price on the candle may not match the price the market is actually trading at. So for this reason, many charting platforms show two prices on the X and Y axis. One for calculation of the Heiken and another for the current price of the asset. So you see the current price of the asset is up here on top at 10,302, which matches this one. But the average of the Heiken right there is about $4 difference. So it's not too much of a difference. So a lot of people like to use the Heiken, and you can use it on a multitude of time frames. So it's a good candlestick pattern to use for capturing trends. And you can see I can click between, you can see the outline of this box in blue, so I can change whatever settings I want inside this one, and I can change the settings on inside this one. So here I'm down to the 2-hour, whereas here I'm still on the 12-hour. But I can't change the time frame. Oh, yes I can. I forgot I could. Okay, so you can see the differences. Now, another thing to note, if you look at, there are some differences in the candles themselves. Here you see 1, 2, 3, 4, about 5 pretty bearish candles, whereas here in that same period, it's roughly just one. It's one big candle, but here it's kind of split up a little bit. So if we were to match those up, let me just draw a vertical line. If you remember from our first video, see, so it automatically matched that up with that there. So let me see if I can come over here and match those candles up there. So if I wanted to match that up, see, it kind of offsets it just a little bit. Okay, so you can see where this is just one candle heading down into this downtrend. This is actually split up and the candle sizes are different. That's really not anything to be alarming of. If you're just using the Heiken candlestick pattern, you really just want to be aware and just note that it captures the trend, whereas regular candlesticks just happen to capture the price of what happened in that particular candle on that particular time frame. So let me go back to just one screen here. Let me go back out to a 12-hour chart here. Okay, so that's the Heiken Ashi. That's another really popular one. So really, it's this one, the Heiken, and just the regular candlesticks that you'll see most people use. Now you see the line. The line does not give you buying or selling of the candle, so you don't see that red or green, so you don't really see what's happening in that particular candle. The line just really shows you what the overall chart is doing, the overall trends and real overall prices. Area, you'll see this one a lot on like Coinbase or other ones. It's very similar to the line. It's actually almost identical to the line that we just saw, except it just has this shaded area under it, and there's really nothing special to it. It doesn't really signify or tell a different kind of story or anything. I think it's really just for looks. And then baseline. This one I just really don't understand. Because if you zoom in and out, I guess this baseline is whatever you pick to decide, I guess, on support resistance zones, that anything underneath this baseline that you set is going to be bearish, and anything under the baseline that you set is bullish. However, what I don't like about it is that you can move it up to basically show whatever trend it is that you want to show, so you're basically setting your own rules, okay, if it falls below this price looks, let's just move this up to 9,000, make it an even 9,000 or so. Okay, so in your mind, anything below 9,000 is going to be red, so it's just signaling bearish. Or you can move it down and say anything below 6,000 is bearish. However, if this is what you use as a basis to sell on or buy on as far as a crossover means when it changes colors to go from red to green, then you'd be missing out on about $4,000 worth of trading of potential profit. So I'm not too familiar with the baseline. I don't think anybody really uses it, to be honest. Same for Renko. The main difference in Renko is you can see that these candlesticks were now replaced with these little triangular box shape things. Linebreak, also not too familiar with them. They look kind of like hiking. They kind of show the different trend, but I think the difference is you see the price here at 10,420. I think what this is signaling is that if there is a line break over 10,420, there should be a trend in reversal, or a reversal in trend rather. But if you'll notice, okay, so this is a much bigger green candle than the current candle that we're on, and it looks like it kind of captures all three of these. So it doesn't really give you an accurate description or an accurate trend of what the coin is doing, or your stock or whatever. I think it's more or less showing you where the trend line break would be in order for there to be a significant trend reversal. Okay, so the next one there is Kaki. Again, not all that familiar with this one. It looks very kind of similar to the hike and Dashy, only it just uses lines to signal trend reversals. And again, this one still has a price at 10,420. Point and figure, not a clue. We're going to skip that one. And this range, I don't know anybody in the world who could possibly trade on this. This is what I have to do. Zoom in. I mean, you don't even see candles. You just see these dashed lines. I honestly don't know who can trade off of that. And that just really skewed the chart there. Okay, so that's the difference between the different candlesticks here. So I'm going to come back with the next episode, and we're going to talk about candle signals, candle trends. Like what is this wick right here? What do some of these candles mean with their shapes and whatnot? But this one was just to give you an introduction to the different types of candles. Your two most popular ones are just going to be your regular candle patterns here and your hike and Dashy candles. Those are going to be your most popular ones that you're going to see a lot of people use. I like the hike in. I really kind of trained myself, so to speak, to just trade off regular candlesticks. These right here. But it's perfectly fine to use either. So that's it, guys. Not much to it. That's the basics behind what candlestick patterns are and the different types of them.